Well, that was pretty painful. Stocks are crashing, crypto is plummeting, and vibes are at an all-time low. And if you ask me, I want a refund because I was promised that when the government reopened, that would be bullish for everything, which begs the question, what in the world is going on? Well, in this video, we're going to be breaking it down. And I should let you know, whether you're bullish or bearish, you're going to want to pay attention to this video because I have no idea what side of the market you're on. So my goal here is to lay out the bull case and to lay out the bear case. And then of course, at the end, I'll give you my own opinion. Very quickly, before we get into the decimation that was today, this feels like a good time to remind everyone that when it comes to the world of active trading, both bulls and bears do get to eat. It's the hogs that get slaughtered. Anyway, by the time they kicked us all out of the casino today, here is the official headline. Stocks notch worst day in over a month as tech sell-off intensifies. As I've said, I feel as if I was cheated. Trump signed spending bill ending longest shutdown in US history. I was told by everyone on the interwebs, mainstream media, and even my grandma that when the market opens up, that should push everything higher. What in the world gives? This was from the White House's official X account. We are so back. Well, we should have known as soon as the second that came out that we were in fact not back. White House says October jobs and inflation data may never be released because of the shutdown. Obviously, the we're so back thing, yeah, it is good that the government reopened and it removed some uncertainty, but we were just hit in the face yesterday with the update that as we were waiting for the jobs data and the inflation data, we're not going to be getting it, which is making a lot of traders and investors in the Wall Street entity as a whole say, what in the world is going on, leading to this type of action. The SPY getting crushed, the Qs getting crushed, volatility exploding, and Bitcoin cracking below 100,000. As you can see over here on the right side of the screen, it is nothing but a sea of red. Here's the heat map for the S&P 500. The tech sector got brutalized. Looking at crypto, $1.4 billion in crypto liquidations in 24 hours. Over 1.2 billion came from long positions. This was in fact larger than the COVID crash. Now you might be thinking,
hey, at least it was only specific to stocks and crypto, commodities and futures.
And you're kind of right, but don't forget, it was also in the world of options. The S&P 500 Delta got crushed all day. The Mag 7 got crushed all day, which means we're in the overall situation saying, what in the world is coming next? Here's the daily chart of SPX, which dropped 1.6% today. So yeah, we have some lower highs. Technically, we did fill the downside gap fill today. If you're looking at the NDX, we dropped to over 2% today. Also got the downside gap fill. Looking at Bitcoin, it is very much in the danger zone of needing to bounce now, or that's a legitimate technical breakdown. And as you can imagine, vol absolutely exploded. And now that I've sufficiently painted a nice red picture for you, let me explain the bull case and the bear case. I understand a lot of the things that I've said recently in this video sound like I'm being a negative Nancy, and of course we're going to sell off, but I need you to understand that is not a foregone conclusion. Remember, when it comes to the world of active trading, you should never be predicting. You should be reacting. You should be reacting to developments and looking for optimal risk to reward opportunities. You shouldn't just be saying, hey, I think this is going to happen. I think that's going to happen. Today is proof that anything can kind of happen on any moment. Even if you think it's going to be a good news, we could have a bad reaction. Even if you think it's bad news, we could have a good reaction, which means react to developments. Don't just try to arbitrarily predict. So with that sentiment in mind, with that framework in mind, let's get into the whole bull case, bear case. So let's take the S&P 500 first. Bull case, bear case, first thing you should be looking at is the 50 EMA. Recently, we've bounced off of it bullish. Recently, we bounced off of bullish. Before that, you're going to be surprised to find out that we bounced off of it. We bounced off of it. We bounced off of it. This time, I have no clue. We might bounce. We might not, but I'm telling you, that's one of the major things you could look for. If we recover off of it, i.e. bullish. On the other side, if we break through it, that would clearly be bearish. So please pay attention to the 50 EMA, and obviously that's also going to apply to the NASDAQ. Another thing you can see here on the NASDAQ is from the technical perspective, we still have an upside gap fill, both on NDX, also on SPX. Today technically made a small upside gap fill. So both of those should be paid attention to. Yes, gaps can last for a while, but I would actually say that this favors the bull case a little bit more, at least from a technical perspective, that the chart to the upside isn't so clean. On SPX, you're going to look at 6829, and on NDX, you'd be watching 25,887. From there, you should be paying attention to what in the world is going on with volatility. Remember, volatility VIX is the vol of the S&P 500. Technically, it's the 30-day contract. It's a theoretical measure, but ideally, they do have an inverse correlation. As vol spikes, you're most likely going to see the S&P 500 dropping. What I want to point out to you is pretty much every time we get above 2021, it does get smacked. Recently smacked. Every single time we get into this zone, it is common to get smacked, but there are a couple instances, such as October, such as April, but that was the whole trade deal. There are a couple times where it can go for a bit longer, but most of the time, and we're here to play the odds, when we clear 20, 21, 22, it only is for a day or two, vol comes back down, and then we see a pump in the market. So obviously, the bull case would just be looking for that pattern to continue, and the bear case would be looking for an abnormal development, a little bit like October, but more so like April. But like I said, that is rare. And on the subject of volatility, I should point out that at least right now, according to the options market, they're only looking at a real vol spike for today, the 13th, and for tomorrow, the 14th. Other than that, the vol is elevated, obviously, but it's pretty calm. As in, the options market is telling us that yes, they want protection, but it's just for really 2 trading days. And after that, there's not that much fear. So I get right now looking at the intraday price action, it might seem very fearful, but according to the options market, where big money is really making their bets, they're betting on this being a short-term affair and not really something that we have to be considered with for too long into the future. Of course, this is dynamic and it can change on a moment's notice, but as of the point that I'm filming this, people are only getting protection for 2 days. Once again, something to favor the bulls, but if we see vol start to spike later down on the expiration, well, that's where it could be problematic. And last, but certainly not least, you have to consider what's happening next week. I'm talking about the world's numero uno stock, Nvidia, ticker symbol NVDA, is reporting earnings. This one earnings report is so dramatically important that we could easily spike to the upside or plummet to the downside. So if you consider that, you're kind of just flipping a coin, but it is something obviously we have to pay attention to. And if you ask me, that's what's going to come and really decide, are we above or below the 50 EMA? Are we getting the upside gap fills? What is going on with volatility, and what in the world is happening with the overall structure of, yeah, we have these nice, beautiful higher lows, but are we going to end up cracking them? Obviously, this is applicable to SPX and NDX across the board. So watch the options flow, watch the 50 EMA, pay attention to the structure, look at the technicals, and obviously, whatever you decide to trade, hopefully you're on the right side of that Nvidia report. So with all of that in mind, please do not predict. React to the developments. If it looks like things are starting to bounce, great, take advantage of it. If it looks like things are about to break down, take advantage of that. But whatever you attempt to do, keep your leverage in control and obviously do everything in your power to minimize your risk. I appreciate you making it to this point in the video, and if you had, I would love to hear from you in a comment below. What is your best guess? What data are you looking at that is telling you this is a dip to buy or this was a rip to sell? Like I said, I would love to hear from all of you in a comment below. That's what I have for you today. I appreciate all the good vibes. I'll catch you in the stream tomorrow.